Good morning. It's Saturday morning, getting ready for the football games here at the office, and I wanted to shoot out a quick video this morning about what is a gap. Some of you, most of you, I guess, or some of you, know what gap insurance is if you're in the car business. And, I got to be honest with you. For 40 years now, or in over 40 years, I always heard the word gap floating around, but I was always in sales. Like I said, I wasn't in the F&I department, understood what gap is. And what a gap is, for the first time, I guess, in I first heard the word 20 years ago, and I just didn't care, quite honestly, what gap insurance was. But today, it's very, very important in maximizing profits around a car dealership. And so, exactly what gap is, it's very advanced program or insurance program. Number one, its main use is that if a customer is buying a car and they're paying $12,000 for that car, for example, and the car only has a loan value of $9,000 to $10,000 and its replacement. So if a person wrecks this car or damages this car, loses this car, it doesn't leave the customer holding the bag for the balance on that loan. In other words, if that car is totaled out by an insurance company for $9,000 and they owe $12,000 on it, there's a $3,000 deficit. And what that gap insurance does is it helps the customer close that gap between what the insurance company will pay and what they owe on the car. That's why, to me, that's why it's called gap insurance. It closes that gap. Now, why is that important to you as a salesperson? Because in this day and time, what I saw, it's a lot of these seminars, or some of these seminars that I've been attending lately, is that so much of us today are involved in this credit world. So gap insurance can actually help you structure a deal. A few years ago, all that meant anything to me was taking a credit application on a customer. And I thought, what's the big deal? It's a credit application. They either apply for credit or they don't. Well, that's not the case anymore. We even have a lender here that most of you have heard about debt to income. We have a lender here that doesn't care what debt to income is. They don't base their applications on what debt to income ratio is. They strictly go by 25% of what they earn each month. If they earn $2,000, then they're not going to allow them to have a car that has over a $500 payment. Now, it doesn't make any sense to me. It's just the way it is for some reason with this lender. Now, they don't care if they've got 4 cars and paying $500 each on those cars as far as structuring the loan. If they have time on the job, if they have proof of income of what they earn each month, of course, and then if their payment does not exceed 25% of that income, they're going to look at that application and they are going to approve it. Now, sometimes they may approve it with $500 down. They may require more down payment, but it's all about structuring the loans. And so this gets into some very detailed money-making situations. Like I said, I've told you before on this on these videos that Shane just absolutely excels I mean, I sat and I watch him on a computer, really putting these numbers in and taking deals that are making phenomenal profits, and not profits on paper, folks. We're not talking about, okay, if this car pays, I could make, $6,000 or $7,000. No, he's putting these deals together that where he's funded on these deals, and he's being funded the next day. He's not even getting the 36 hours that sometimes they request. He's damn good at this stuff, and he's getting funded the next day on it. So I am so proud of him. But he has dedicated, I mean, hours and hours and hours and money investing into this situation, and it's paying off for him. I'm really encouraging him to start doing seminars on this for new dealers, because it can jumpstart them so much and take them from, most of you have asked me throughout the course that I've been on this video, a lot of you have asked me what type of cars do I buy and sell. And I did know, and I still know to a degree, but Shane has a formula that he knows exactly which cars to buy and sell, not because they're pretty, not because they sell well, because they finance well. And I see him do that on a daily basis. I watch him go to the computer, sit down with Mannheim, research the inventory, and extrapolate that inventory out of that pre-run list and put it into his GAP program, his online credit application. And what he does is determine, okay, well, he did a Cruze yesterday, a Chevy Cruze. And to be honest with you, I'm not a big fan. I don't know anything about Cruzes. I'm not a big fan of Chevy Cruzes for any particular reason. But I watched him extrapolate a 2014 Chevy Cruze yesterday into his program. And it had 69,000 miles on it. And he's looking to buy that car primarily because when he got through putting that car out there, he can buy that car and sell that car with $500 down to people that qualify for his GAP insurance and get them under a $300 car payment and make almost a $7,000 profit. Okay? That's amazing that he can buy a car for $4,000, what the MMR is on it, and he's got a way of knowing that if he gets that car in that price range, that he can just knock an absolute home run on that car. He won't even talk to people about the cash price on that car. He's a payment seller, and he's an excellent payment seller. If a person walks in and says, well, I can afford $300 a month, Shane starts structuring the deal to get exactly $300 a month payment, and whatever money he can get for that $300 a month, he does. So like I said, I'm encouraging him to doing some seminars on this thing. Of course, Shane's not like me. I love to help people, and he does too, but he values his time. He's not going to give it away. He's going to go out here and there's, I'm not going to allow him to give it away, to be honest with you. So there's going to be a small fee for these seminars to compensate him for his time. But the return on that is absolutely huge. So that's just, I don't want to get into what the GAP insurance, that's the basics of what it does. Why it's important to the loan is because a lot of times if you have GAP insurance, that makes the loan, the lending company, look better. It puts them in a better situation because they know that if you have added GAP insurance to that car deal, that they're not going to lose any money if the car comes up being totaled out for some reason. they're not going to get just what the car's worth, that there's a gap insurance that's going to pay off the entire loan. And so that's amazing. And even that gap insurance, something I learned yesterday was the fact that the gap insurance is good for the entire term of the loan. So that was just strong to me. Anyway, I'm at my 10-minute session. I enjoy my time with you. I'm loving learning about this stuff. I'm watching it work. I hope that you like this channel and share it with other car dealers, because if they're new in the business, this coming up information is going to be absolutely priceless. Have a wonderful day. Please like and share the channel.